personally. Cool. Okay, so let me tell you a little bit about what we've built to date. So first of all, we made a bunch of courses. Like I said, we start off as an education company. If you join Lumi Wealth, you can get all these different courses, learn about algo trading, blockchain programming, all that kind of stuff. We have these live algo building sessions every Tuesday. This stuff is freaking awesome. If you join our live algo building sessions, this is what I talked about. Basically what happens during these sessions is we have a lot of really smart programmers and a lot of really smart finance people come together and say, we have basically a poll at the beginning of the class. We'll say, what do you want to work on today? Do you want to work on an iron condor bot? Do you want to work on option spreads? Do you want to do some sort of Forex thing? Like, what do you guys want to work on today? We'll have a poll at the beginning. And then whatever people vote on, we build that out, right? So we have a coder running the thing. Basically, a lot of times it's me. We now just hired a new guy who is a much better programmer than I am. I started when I was 12. He started when he was 10. So, he's a really good coder, I'll tell you that much. So you join these sessions and you're like, yeah, this is what we want to build. And he starts building it. And you're like, no, well, what if we put a stop loss here? And what if we did this here? And what if we use this ML thing? And we end up building some really, really cool stuff. We've built some amazing algorithms to date. The back testing results are crazy. We're still pretty early. We started doing this not that long ago, so we're still pretty early in terms of results with real money, but our back testing results are crazy. Our paper testing results are pretty great as well. And what we're coming up with, I mean, just the ideas are mind-blowing. So love those algo building sessions. We also have a strategy library. So if you join our programs, anything from our pro plan and up, and I'll tell you about that in a bit, but we basically have a whole library of code that you guys can use. We have 100 different algorithms that we've built. You can just take that code, use it, run it. A lot of stuff that can make you money right out of the box. A lot of stuff that you could take and actually modify, do some really cool things with it. So we have this huge strategy library. It's basically like a one-button click to get it going. You need to know a little bit about some stuff, but even if you've never coded in your life, you could probably get these algorithms up and running within 10 minutes or 15 minutes. So we're trying to make it easier and easier, more accessible to people, and build out better and better alpha, better algorithms. Right? So to give you some examples, here's one that we've made a long time ago. This is one of our first algorithms that we made maybe 2-3 years ago, something like that. It's been running for about a year and a half. This one, I don't know if you guys can see this. It's a little down the bottom there, but it's up 38% since June 21, 2023. So 40% return in a year and 2 months. I'd say it's a pretty good start, right? It's one of our early stage ones. Not any crazy down. We don't see any crazy downtrends or anything like that either. So pretty nice. But that makes sense because that's what we predicted, right? This is our back testing result. This is what we expected, right? We back tested this thing very thoroughly. We expected about a 29% annualized return doing this. This is a back test since 2010. And you can see that's how it would have performed historically. And then that's how it actually did in real life. So we're about there. It's actually doing even better than what we thought, which is fantastic, right? Cool. So some other things we're working on. Here's a couple of different bots. I don't want to give you guys everything because there's like a million different bots we made, literally over 100. But a couple of ones that I find very interesting and some of the newer ones that we've built. Here's one that copies something called Alpha Pix. Who here has heard of Seeking Alpha? We've got a lot in the room. Yeah, exactly. Huge company. These guys have been doing this for a long time. If you want to post about financial related stuff, you can do it there. There's a big reach. But they came out with something called Alpha Pix. I don't know if you guys are aware of this, but the results are actually pretty amazing. So here you can see in the two circles, right? S&P 500 up 46% over this time period. I think it's about a 2-year time period, maybe a little longer than that. Alpha Pix was up 125%. They beat the market by quite a nice margin, almost triple actually. Pretty amazing results there. So basically what they do is they provide trading signals, buy this stock based on our quantitative research. They have a lot of data, so they actually have a competitive advantage to other people. And coming up with those results, they've actually came out with some really great things. Like for example, I'll tell you, I've been trading with them manually For the past year, one pick Modine Manufacturing made me over 100 grand. That one pick alone, right? I bought this thing. It was up 500% since I bought it. Amazing, right? Paid off very, very well. So we built a bot that basically just copies these guys, right? You guys are we're talking about all these advanced AI bots, all these different type of things. Sometimes all it takes is something this simple: copy alpha picks. They're doing well already. Just do what they're doing. That's it. You get some nice results. Okay? Another bot that we've been working on for some time is our Iron Condor bot. Who trades options here? You guys, options traders? We got a couple of them. Awesome. Very cool. Options are very interesting. So you can do some very complex stuff with it, right? You can take on a lot of leverage. You could set up different risk profiles. You could have condors. You could have spreads. You could have calendar spreads. You could do all sorts of different things. But I kept getting, we've been teaching this for a while, and people just kept coming up to me like, I'm doing these Iron Condor things. I'm making a ton of money. And I just heard that over and over and over again. I'm like, well, why don't we build this, right? Why don't we create an Iron Condor trading bot? So that's what we did. And I don't have the details behind this because we're in a bar. Who wants to get super technical? But if you guys want to go look through our stuff, we do have a lot of details to this because you could customize this thing like crazy, right? You could do martingale stuff with it if you want. This one isn't used, even though the name says martingale, this one isn't using martingale, but you can if you wanted to. You could do things like what deltas you want to buy, what deltas you want to sell, what time of day, how long you want the expiry dates to be out. You could do all sorts of crazy stuff. But here's one that we did. This is our version 12 of this martingale, Condor martingale, which again isn't using a martingale. So whatever. We came up with this version 12 a little while ago, and it's actually been doing pretty well. So this is saying 77% a year in our back testing results, 31% drawdown. I'd say that's a pretty good ratio there. We have a Sharpe ratio, 1.4. My favorite metric, I know everyone likes Sharpe ratios. I love this ROMAD. Who here has heard of ROMAD? Like pretty much nobody. It's a ratio that is basically you take the return divided by the max drawdown. Right? So 77% divided by 31%, you get a 2.4 ROMAD. Right? So higher returns, lower drawdowns, that's what we really want at the end of the day, right? So this has been running for about a month now. This is what it looks like currently. I took this screenshot this morning. It's up 8% this month. And by the way, this is probably the worst month I could think of trading Iron Condors. Because like the volatility, for those of you that trade condors and know anything about options trading, they do very badly when volatility is high. And oh my God, volatility has been insane lately. Trump gets shot. We have a new person coming in. There's all sorts of craziness going on. Market's down 3% one day, up 3% the next day. But somehow this thing's still making a ton of money, or 8% to be more exact in the past month. This is probably the worst possible month for it, and it's still up 8%. I'd say it's a pretty good start. Here's another one we're working on. This one gets more extreme. This is our spreads martingale. So basically it's using option spreads. It's buying a call and then selling a call at a different strike price. And then basically doing that every day, one day to expiry. And if it loses, it doubles up. It's a martingale type thing. This one, we got a backtesting result, almost 400% a year. That's pretty crazy. Max and the max drawdown only 15%. So our ROMAD number is ridiculous. It's 26 on this chart, or a Sharpe ratio of almost 3. Pretty damn good result. This is still experimental. It's a new one that we're working on. I don't have the graph for it yet, but you'll see this is I think we'll see some pretty good results of this. And here's another version of that. This is made by our new guy that's actually running our Tuesday classes like I talked about. He built this thing out, programming since 10 years old, built some crazy stuff. Annual return, 280%, max drawdown, 30% or 28%. I'd say that's a pretty damn good start. So some really interesting stuff here that we're working on. I could go on for days. We have tons of stuff. I don't want to bore you with all that. If you want to go check out our website, Lumi Wealth, illuminateyourwealth.com. You can see all that stuff, but that's just a couple of examples of things that we've been working on. It's really, really cool things that I'm very excited. I mean, if I got 400% a year, let me tell you, I'm going to be a very happy person. I'll tell you that much. Just a couple of years like that, just a few, Cool. Okay, so if you guys want to get involved, how can you get involved? Here's our plans. We're having a sale right now. We have a starter plan, a pro plan, all access plan. Let me describe these really quickly. Starter plan is basic stuff. You're going to get some very basic algorithms. Check this stuff out, kind of get access to some basic stuff. 3 algorithms. We have 100, 3 out of 100. That's free trial, $50 a month. We have a pro plan, which normally costs $1,000 up front and then $400 a month after that. But we are having a sale right now where it's $279 a month, $500 sign-up fee, but I actually have a better deal for you guys. So if you guys have the QR codes, you can scan the QR codes. I'm going to show you another QR code at the end. You're going to get that sign-up fee for free. So it's a hell of a lot cheaper than what we have on our website. But basically, this pro plan is going to give you access to this class that we do every Tuesday. So you get to be part of that whole community where we're building algorithms. You get to actually tell this guy what to build, right? I want to build an algorithm that does this. I want to build an algorithm that does that. You can actually direct it and do that sort of stuff. You get access to a bunch of our different courses and all that kind of stuff. Pro plan is pretty much what most of our people sign up for, and very happy customers that we have. Then we also have our all access plan, which takes all that. And then if you want, if you sign up for our all access plan, we actually get someone to help you with development. So if you're someone who's not a coder, you want some help with this stuff, all access plan will give you that, and then also give you access to all of our algorithms, all of our code. It's all access, right? Makes sense. Cool. So there's coupon codes if you want to save those. They're on our website too, so you don't necessarily have to save them. But cool. You can also book a call. This is a great way to get in touch. Scan that QR code. It's going to take you to lumiwealth.com/book-a-call, and you'll be able to talk to someone on the phone, and they'll kind of tell you all about what we're doing and what our algorithms are performing like and what you can expect from all this. So scan that QR code. You'll get the ability to book a call. You'll speak with either my wife over there, Alicia. Say hello. So my wife, she's head of sales, but right now taking care of our kid, actually. So she's on maternity leave. We have a 6-month-old baby boy back at home. Very cool. We're taking him to Poland, by the way, for the first time on Sunday. This would be a very interesting trip. Yeah, yeah, exactly. Yeah, definitely wish us luck on this airplane with a 6-month-old baby. Going all the way to Poland, like 8-hour flight. Yeah, so anyway, so you book a call, you either speak with her or you'll speak with one of our other agents, and they'll tell you all about what we're doing and results and all that kind of stuff. All right, and then I also have a discount coupon for you, and this is basically a coupon code that we have all over the place. You'll see it on the bar, you'll see it when we walk in. This will give you 100% off our sign-up fee, which is $1,000 off, or $999 for anyone who wants to be precise. 100% off our sign-up fee, save $1,000, and you could actually join everything that we're doing. Or if that coupon code doesn't work for you, lumiwealth.com/ny-event. All right, cool. So that's pretty much it for my presentation. But I did promise you guys a bit of a Q&A session, so I'm going to switch over to more chill mode here. So what do you guys have in terms of questions? I've heard some pretty good ones. What do you guys think about the whole algo trading world? What are you guys up to? I'll open it up. What questions do you guys have? Sure.
One of the challenges is order execution.
Yep.
You get a data feed, what's happening, but getting the order in at the right
yes.
And executed.
Yes.
How is that addressed in Lumio?
Sure, great. So the question is order execution. How do we do order execution? You're the second person to ask me about that today. The first person is over there. So order execution is very important. What we have is we have an open source Python library that we have created over 5 years now. We connect to a bunch of different brokers. We connect to Interactive Brokers, Tradier, Alpaca, and a bunch of crypto brokers. We're also working on integration with Schwab, which has amazing order execution. So the execution, a lot of it rests with the broker, but the rest of it is really just code that connects up to them, right? We're listening to their WebSockets. We're sending them things directly through the API. So we're using an open source library to do all that communication. Does that answer your question? Sure. Yeah.
So if the algorithm says like in buy now,
Mhm.
the price can go, especially on options, it can change very quickly.
Yeah.
So you don't want to get caught on the wrong side, even if you're in the limit, right?
Hmm.
So if we see that the trend is going higher or lower, whatever direction it is, the challenge it seems to me is, or at least which I have had, is you don't want to chase it, right?
Hmm.
So it's like on paper, it is always execute this order at this time.
Hmm.
So in reality, the papers battery is.
Oh, let me plug it in. I did not plug in my laptop. Thank you very much for that. So your question is essentially that prices change on options quite quickly. There's even more. There's a spread too. You have to consider, right? The bid-ask spread. So we've been working on addressing that, and that is a hard problem. I'll admit to that. That's not an easy thing to solve. But some ways that we address that is, first of all, we look at the spreads, right? The bid-ask spread. If it's too high, we just refuse to trade. We just don't trade it. But then we also put in things like, first of all, limit order is also very important for options. We want to put in limit order, not market orders. We get, actually, it's funny enough, we ran an algorithm that was using market orders versus limit orders, and they were like night and day. It's like one of them, it just blew up, and the other one's doing very well. So, limit orders, I think, is a must when it comes to options or anything else that's not very liquid, right? Another thing we're planning on implementing is something I think they're called Option Alpha. They've actually been working on this sort of thing, where it's not necessarily chasing, but what you'll do is you'll put out a limit order at the bid price, and then if it doesn't get filled in 10 seconds, you up it. If it doesn't get filled in 10 seconds again, you up it again. And you just keep doing that until it gets filled, right? I think that's a pretty smart way to do it. But in general, it is a difficult thing to do. I'll agree with that. But those are some of the ways that we're tackling it. Make sense? Oh, no problem.
What asset classes are you primarily focused on or prioritizing in your product development pipeline? And secondly, what are you doing to overcome the adoption rates for institutional investors? So, what you're doing is much more sophisticated than most trade houses, even banks, and in many cases hedge funds. So
it's good to know.
That seems like servicing those companies though is the key question. So how are you going about that?
Yeah, that's a very good question. So two-part question. So I'll address the second one first, and then we'll go back to the first one. So the question is, how are you going after institutional investors? Apparently what we're doing is more sophisticated than a lot of institutional investors, which is fantastic. Thank you for letting us know that. So we haven't really gone after institutional that hard yet, to be quite frank, right? We're mostly going after regular clientele, people that are here in this room right now. And the reason why we've done that is just it's easier to kind of go after those types of people, and it's kind of what we know. But institutional investors is where we want to get to eventually, right? Because that's where the money is, right? Let's be real here, right? We could have 100 retail clients versus BlackRock. I mean, it's not even close, right? BlackRock alone would make our entire company be 1,000 times bigger or something. So we definitely want to get to that, right? But we started off with retail clients because we're doing some very different kind of stuff that I think a lot of companies at first would look at and be like, that's a little risky and not stuff that I'd really want to do at first. These corporate types they're very, very risk averse, and they want to see a big track record. More than anything else is they want that track record. That's the risk aversion of it, is not only what are you doing for risk controls and things like that, but how long you've been doing this for and how much money have you traded and that sort of thing. So that's why we decided to start off with retail clients first, build that track record out, show that we've managed a bunch of money, show that we can handle this without things blowing up, and then we're going to be more pursuing these institutional clients. Right? Does that answer?
Yeah.
And then the first part, sorry, was again?
What asset classes?
What asset? Okay.
So are you prioritizing equities? Are you moving on to options on those equities, and then maybe bonds or commodities?
Sure.
What does that look like in your development?
Sure. So right now we have built a lot of bots for stocks. Like I said, the Nancy Pelosi bot being one of them. But we've done a lot of stocks. We've done a lot of crypto. I think crypto is very interesting, especially outside of America. We actually get a lot of people from like China and places like that that can trade with Binance, and there's some really interesting stuff there, right? It's kind of sad the way that the SEC is treating crypto in America. I really don't like it personally, just because there's all this innovation happening across the world, and they're doing all this crazy stuff that's making a ton of money. We can't do it here, you know. But they're doing it, and we have people that are building it, right? Maybe we need a Cayman Island entity or something to do that. Yeah. So stocks, crypto, options. I showed you a couple of options bots. That's definitely one of the bigger areas of interest right now, because again, you could use leverage. You could do a lot of very interesting things with options. And then our plan to go next is to go into futures and Forex. I've spoken to some Forex people here. It's crazy how much money you can make in Forex. I used to always think Forex was like a money pit, right? Because I had friends that were trading Forex, and they're like, no one ever made any money. And then you start meeting good Forex traders, and these guys are making like 100% a year. It's like ridiculous. So I think that's another big area of interest. So futures, Forex is a big one. Sure. Yeah, that makes a lot of sense. There's a lot of leverage, right? Absolutely. Yeah. So the point there is that you could lose money just as quickly in Forex, which is absolutely true, especially with Australian brokers. 500 to 1 leverage. It's like, that's insane. If it goes 0.01% against you, you're out. Basically. Cool. Thank you. Sure.
Are the strategies like long only, or are you guys doing like long and short?
No, we do all over the place. I find it a lot harder to make algorithms that make money with shorts. I find that to be a lot more difficult, at least in the stock market, right? And Forex is different, right? Because Forex, it's a totally different market, and like you're more trading sideways than anything else, usually, I think. Not like I'm a great Forex trader, but it's a different sort of market. For sure, I'm always really listening to people that say they can make money with shorts. Because if you could figure out how to make money when the market's going down, it's very easy to make money when the market's going up, right? Just add leverage, you'll make money. Like, buy TQQQ, you'll make a killing in a bull market, right? But making money on the way down is a lot more difficult. So I'm always on the lookout for that. One of the best bots that we have so far that can make money on the way down is our Iron Condor bot, because it doesn't matter which way the market's going. As long as it's calm, right? As long as we're not seeing crazy volatility, we're making money. I don't care if it's going down or up. Doesn't matter. I'll make money regardless, as long as we don't see Trump getting shot on TV. I think we're good. Cool. Sure. So the question is, the strategies that I showed earlier, do they include commissions, and what kind of leverage are we using? Sorry? I'm asking you what is the leverage that you use for these boards? Yeah. So what leverage do we use, and do we include commissions? So we do include commissions in those bots, right? We include, I think, a 0.1% commission by default anytime we backtest. That being said, though, there's a broker that we actually work with called Tradier, Tradier. It's one of our partners. I'm actually doing a podcast with them now too. So check out Tradier, check out the podcast we're doing. We're going to have a whole thing. But they allow you for $10 a month to have 0 commission options trading, which, for those of you guys that are options traders in this room and you trade day trading options, that is a huge amount of savings. So to give you an idea, our Iron Condor bot trades daily 1 DTE options, right? So every single day it's putting on 4 different trades, right? Because there's the calls, short and long, there's the puts, short and long, and then times the amount of contracts. So we're talking about, like, for a small account, maybe 50 contracts a day times 60 cents, right? So Like that's like $30 a day. That adds up very, very quickly. With Tradier, instead of $30 a day for commissions, you pay them $10 a month and it's free trading, which is crazy, right? So one of the reasons why we've linked to that broker, right? It's a huge thing. So when it comes to commissions, and then Alpaca is another one that we work with, free trades for stocks. So we try to optimize it in that way. We try to get away from paying trading commissions at all, right? Not always possible, but we try to get that. For crypto, it's a little bit more difficult. But yeah, we try to avoid commissions in general. So hopefully what we have on the board is actually pessimistic, because it includes trading fees when we don't actually have to pay them. Now, the other side of that you didn't ask, but slippage is something that you have to also really pay attention to, right? Which is something that we're actually working on a lot. Like, how do we make sure that we're always buying at the ask and selling at, or whatever, we're getting the best prices, right? So we're putting together a lot of different things that's looking at bid-ask spreads and making sure that we take care of that really well, because that, I think, is a lot more important than just the commissions.
For your strategies, what kind of the rebalancing period you usually have? Is 1 day or intraday or multiple days or weeks? What's the rough idea?
Sure. I mean, that's really, it depends on the algorithm, right? So the first algorithm I showed you, this is our diversified leverage bot. This one here. I'm not a big fan of using fixed periods to do anything like rebalancing, because I feel like that's arbitrary. Like, why a month? Why are you rebalancing your 401k once a year? Who says that a year is the right time, right? Like, I mean, if the market just tanked, you should probably do it now, right? So this one in particular, this one does rebalancing, because this one trades stocks and is holding a portfolio. This one trades based off of a threshold that we have. So we'll say, okay, it needs to own 20% of this asset, 10% of this asset, whatever. And when that goes too far out of whack, that's what triggers a rebalance, right? So instead of saying we rebalance once a year, we're going to rebalance based on changes in the market, which I think makes a lot more sense. Then you're more likely, and when we backtested that, it did a hell of a lot better doing that as opposed to an arbitrary time period, right? Because you end up buying low and selling high, kind of naturally, right? That's a rebalancing period. Then we have other bots that, they're not rebalancing, right? Like this one here, Iron Condors, is literally just day trading, basically. It's trading every single day, putting on a new condor every day. Spreads, this one, same thing, trading every day. So it really depends, right? It's hard to say that this is the way that we do it with everything, because every bot is so different, right? If you're trading options, you don't want to hold them for that long usually, right? Because or if you're buying them, at least you don't want to hold them for that long. If you're selling them, it's good to hold them. Yeah.
So you have fixed profit taking threshold based or?
Yeah, we do have a lot of profit taking stuff. We do have stop losses. We do all that. Again, it really depends on the algorithm, right? In some cases, taking profit's a bad idea, right? Like a lot of times people will say, oh yeah, why don't you just take a profit, or why don't you put a stop loss? That's my favorite thing. So many people come up to me like, oh, this algorithm's losing money. Why don't you just put a stop loss on it? Okay, let's put a stop loss. It loses even more money. You know what I mean? So I feel like that's kind of a simplistic way of thinking about, sometimes it works, sometimes it doesn't. But it's like, it really depends on the algorithm. It depends on what you're doing. There's a lot of details to it. Cool. Thank you for that question. Yeah. I'm going to go, yep.
Do you know if anybody's running the butterfly condor or the spread market live that might be able to share their live data, so you can see the comparison between the back test and the live? Because I'm really interested in seeing those two. I'm using the platform, so
yeah. One of our clients here. Say hello. So yeah, and thank you for coming out, by the way. So the question is anyone using, he's talking about specific bots that we have, and again, we have like 100 of them. So you're talking about the butterfly condor, and the other one is the spread smart go.
But yeah, the rolling spreads is another one I'm interested in seeing if there's any live results on that.
Yeah.
And I'm wanting to compare it to the back test, even if it's over a short period. And I don't know if any users are how their results were comparing. Because obviously we talk about slippage, and the results of the back test could be a little different from our results, and
So I think this is our spreads martingale, right? It was up until a little while ago. It's kind of a little erratic, the spreads martingale. We're working on, this is still pretty early stage, right? This one, I think we need to put limit orders on. That's basically what we're talking. We're getting killed by spreads on this one. So we have a version 2 that actually just started running. Hasn't done anything yet, right? But you could watch this. This is with paper trading, not with live money, right? So this one is still work in progress. That's why I said it's still experimental, it's still work in progress, right? It was up at one point in time. It made, I think, 60% in like 2 weeks. It was pretty crazy how fast it went up. And if you ask Tommy, I think his version of this bot was up 70% in a month or something like that. So it did very, very well, but I think it's still getting eaten by spreads.
so Tommy's got some of these running.
Yeah, he does. Yeah, if you speak to Tommy, he has a couple of these running. This one got eaten alive. I think honestly, like if you look at the back testing results, it didn't fall this much. So we're investigating that, and I think this is because of those spreads. I think we need to improve on putting in limit orders, making sure we're putting in mid prices, not buying at the ask or that sort of thing. And then the one that you're talking about, the butterfly condor, that one also still work in progress. We got some pretty interesting results on it. But then when we ran it live, it just didn't match the back testing results that we got. So, but we haven't really gone back to it yet. Okay. So both works in progress. Yeah.
Okay. Yeah, I'll talk to Tommy, and then if you know anybody else that's tried any of these strategies, I'd love to chat further with you.
Absolutely, yeah, for sure. We'll definitely introduce more. Yeah, very cool.
Can these strategies scale depending on the market you guys are trading? There's options, there's limited inventory, right? And the more people see your order size and your trade log, what's stopping market makers from being able to counter your trade?
Yeah, that's a good question. I'd like to reach that point. The moment that market makers start paying attention to us, I'd be very happy about that situation. Or I wouldn't be happy about that, but happy that we got to that point. So I don't know. We haven't gotten there yet. Cross your fingers that we get there and we make enough money for Wall Street to actually care. Yeah. But the liquidity is quite deep on things like the SPX and all that. Like the SPY has a lot of liquidity on it, so it's pretty hard. You need a big bankroll to start pushing that. Yeah. Cool. Yep. So the question is, how many levels of martingale do we go on our iron condor martingale? The one that I showed you has no martingale. That was a back test, 0 martingale on that. So this is right there. Yeah. So this one is not doing, it's called martingale, but it's not actually doing martingale. We have other ones that have several different levels, and the results are actually way crazier than this. But that's with a caveat. You can make, one of them has like 1,000% a year return when we back tested it, and it was crazy. One of these things that we did, I think it made 100% a month or something for a little while, and then just blew up. You know what I mean? So you can make a crap load of money with it if you're doing martingale, but there's also that potential. Actually, I don't know if you've heard of this other company called NERP. They're pretty big in the space as well. They trade Forex, and they're making like 100-something% a year for a while, and doing martingale, same thing, martingale. And you could tell just by the way their graph, like when you trade martingale for long enough, you could see the graph. You're like, okay, I get what you're doing, right? And the Japanese yen situation that happened, 2-3 weeks ago, they just went straight to 0. 3 days, their account 0, right? So that's why this one right here, we looked at that, we're like, oh, maybe we don't want to be doing martingale that much. It's interesting because if you're playing the markets like, I'm going to put some money in and I'll let it grow and then take some out, knowing that one day it will eventually blow up. I think that's a smart move to do with a martingale type strategy, but I would never put my life savings into something like that, because that's just, again, you could be, making millions of dollars and then one day it's all goes to 0, right? So it's is something that we've been really paying a lot of close attention to lately. All right. Any other questions? Yep. So the questions around data and how did we use. So how much data are we using for our algorithms? Okay. Yeah. So in terms of data, it depends on the algorithm, right? Some of them need more data than others. We use Polygon as our main data provider for historical data, and we're linking up with a brand new one called Theta Data for options specifically. It's like a kid somewhere in the U.S., but amazing data for very cheap. That provides us with like bid-ask prices and a lot more than what Polygon provides. Polygon's kind of like the big data provider in the room, relatively speaking. So yeah, so that's for back testing, and so with our stock trading bots, we can go back quite far, right? Like that diversified leverage, that was going back to 2010, so that's what, almost 15 years, right? For options trading bots, it's more difficult, right? Because it's not just about the data, right? Like you can get options data going back 10 years, it's not that difficult. But the problem is that when you start going back 10 years ago with options trading, I mean, that it was trading once a month. There's a lot less liquidity. The market was different. You know what I mean? So even if you have the data, it doesn't really matter that much because now we're doing 0 DTEs with a ton of liquidity. I could buy an option right now. It was past the market close, right? But let's say if the market was open, I could buy it, 2 p.m. It expires in 2 hours. That wasn't possible in 2010, right? So that kind of makes options data a little bit more difficult. But when it comes to futures data, you can go back quite far. When it comes to stock data, you can go back quite far. Forex data, you can go back quite far. So it depends on the nuances of it. Right? Sorry, the question is about machine learning? Yeah, so I think the question is, what kind of machine learning do you do in these algorithms, and how are you using AI? Is that the question, essentially? Yeah. Okay. I've been asked that by a lot of people here. What kind of AI are you using in your bots? I'd say the majority of the AI we use right now is using copilots, right? So we'll have a person who's building something out and uses AI to help build that software code. That's by far the majority of AI that we use. What I've found is that a lot of people and we've had some really smart people do this. Like one of the people as part of our group is like an ex-Google engineer, and he like invented Alexa. You know what I mean? He's a really smart ML guy. He, for the life of him, can't figure out how to use price data to actually predict the future of the market. And I think it's just because there's just no signal in it, or just not enough signal in it, right? To try to use price data to predict the future prices of something, I think it's very difficult. I think you're going to have to use something else. You're going to have to use like news data, or what is the CEO doing, or fundamentals, or social media, or God knows what else. I think you need to find other ways to get signal than just looking at price data alone, right? I feel like everyone starts with that and they just rack their brains. And honestly, I've seen so many super smart AI engineers do this and can't figure it out. So, I mean, take it out. Maybe you can figure it out. Maybe you're the one that does. But given the fact that these people haven't, I just think that there just isn't a lot of signal inside of purely price data. That's what I think. Cool. Question back there?
So I don't want to begin by saying, I imagine that problem of pricing data should be a bit more qualitative than purely quantitative. I think that's one of the reasons why it's hard to obtain signal. There's probably a variety of factors that are just hard to recode into quantitative data.
Hmm.
At least that's what I imagine. That's the quantitative social science statistician side of that.
Hmm.
The question that I really want to ask you, and I do apologize if this is somewhat trivial, I believe this is been mentioned I essentially want to, sort of dig into your mind to understand how you're moving towards optimal execution for some of your thoughts. If you possibly give a, go into another example.
Okay. So the first part in terms of qualitative, you mentioned, that maybe the reason why the pricing data isn't working because it's not qualitative. Maybe. I mean, like I said, it's this is trading, right? It's like I learned a long time ago to never say anything's a stupid idea, because every time I said something was a dumb idea in trading, someone's making a ton of money doing it, right? So I'm like, I used to be like, no one makes money trading Forex. It's a terrible idea. And then I meet these guys that are making like insane amounts of cash doing it. Like, okay, you learn to get humbled, right? So maybe you're right. I just haven't seen it, so I don't know. And then on the other side of it, you're talking about execution. You want to ask about how we're executing orders and all that. I mean, I don't know how much deeper to go. We connect directly to the brokers with our APIs, right? So if you work with us, we give you access to our open source Python library. You are directly connecting to the brokers. I don't know how much faster you can get than that, other than, you buy a server here on Wall Street and you connect directly to the New York Stock Exchange, right? That's a whole different story, right? But then you need a lot of money to do that. I've heard something like $100,000 a month or something ridiculous like that to rent out a space next to NYSE just to reduce your trades by like some fraction of a millisecond. We're not going to beat that. That's not what we do. We're not high frequency traders. If you want to do high frequency trading, I mean, you got to go to like a big firm that has a lot of money that can afford to do co-location and things like that. But the way that we do execution is we just connect directly to their APIs, right? Schwab has an API. We connect directly to it. We go from, whatever server you want to use, AWS, Google, whatever, and we connect directly to them. Hopefully they have their servers on that same spot. I know some people, they'll look at crypto brokers and they'll say, okay, Coinbase, they host their stuff with AWS in specifically US East, right? So you want to run your algorithm on US East with AWS, because then you'll reduce that latency by some fraction of a second, right? So you could do that, right? But we're just directly connecting to their APIs, and the rest of it. We're not high frequency traders. We think the thing that I really believe in with the future of trading, right now a lot of people make a lot of money with high frequency, and Citadel is one of those things, for example. I really believe in the intelligence of it, right? I think that's what's coming next, right? AI, we're just at the very beginning, right? We're at this little tiny, it seems crazy because you talk to ChatGPT. I've had full out conversations with it. It knows everything. They've actually cut me off because I've spoken to it. My wife knows this. I talked to ChatGPT for so long that they cut me off because I'm like, tell me the secrets of the world, right? But we're at that very beginning point, right? Eventually AI is going to be so smart that it can outsmart even a room full of very intelligent people like this. You guys are all geniuses here, everyone I've spoken to. Eventually AI is going to be smarter than everyone in this room combined times 1,000, right? When that happens, to me, that's the interesting part. That's what we're trying to gear towards. So whether we execute, right? Whether we execute in fractions of a millisecond, sure. I mean, we could probably do something like that. I'm more thinking about, are we buying the right thing in a way that's going to work in an AI world, right? That's what I'm thinking about. Does that answer your question? Awesome. Oh, no problem.
All right, so with the option strategies, a couple of them.
Yep.
How do you interact with possible expiration clashes, like getting called on the short side of the spread if it settles at the strike? Is there any other interaction aside from coordinating?
So the question is, how do we deal with option expirations? And specifically, you're talking about when we get called on the option. Is that what you mean?
Yeah, if it's like a butterfly or something, you short, you have the monies and the assignment risk.
Yeah, like assignment risk. Yeah. So I think that's something that we can do better at, because I've ran a couple of these and we did get assigned. What we do right now is we kind of just bail, right? We get assigned and we just sell everything and that's it, right? But I do think that there's better ways to deal with it. One person in particular in our group keeps keep saying, we should use SPX and things like that where we just don't have that risk. And I think that makes a lot of sense. Let's trade SPX, let's do those other things. But I mean, how would you deal with assignment risk in person, right? Without automation, right? Like, what else can you do? You sell what you got assigned for, and that's about it, right? You exit your position, right?
I perhaps might do, like challenger spreads against it or something, or, to do something to moderate the risk.
To hedge the risk somehow.
Yeah.
Oh, that's smart.
A lot at the strike,
Okay.
but when it does, I traded commodities on the floor,
Okay,
crude oil, coffee,
that's cool.
and you go home and you don't know that night, even though it's settled out of the money, some of these physical producers, Hershey's, they kind of know what might be going on. I was in coffee,
Right.
cocoa, but then you get extra stuff. It's like, oh my God, I am now long. And you come in Monday and
Yeah.
it's like a weather-related event or something.
Right.
That doesn't happen that much anymore.
Right.
That's why that's a lot of risk on it when it does happen.
That's interesting. Well, first of all, this is why you have such good projection with your voice if you work on the floor. I could tell. Yeah, that's very interesting. I mean, I would love to learn more about the strategies that you're taking. I would love to say we know everything. I mean, that's something that just doesn't happen often enough to have a ton of experience in it yet, right? But I'd love to hear some of your suggestions. We could just automate that, right? Whatever you would do in person, just make a machine do it, right?
I'll just add this, it's never going to happen again, but there's nothing like the ability to trade staring at the other side of the trade. Screens, it is what it is, but
Yeah.
wow, it was crazy.
Yeah, that must be amazing to go to someone and say, give me $100 million of X, and just screaming at them across the floor for it. That must be pretty cool. I would love to go on the trading floor one day.
What's cooler is when your clerk checks with their clerk, and it's a huge trade, and they're like, John doesn't know that one. So people go outside and they settle it.
I've heard some crazy stories about the trading floor, man. I know I know one guy I used to work with. He told me some crazy stories back in the day. Not anymore, apparently. Awesome. Thank you for being here. Cool.
So first, I think we have found that with the elephant effect, which means that at a certain point the ticket becomes so big, or there's so much congestion of tickets that the market is not taking this anymore and so on. So let's assume this is a problem, right? Generally in every situation and so on. And there is a certain limit into which you start cannibalizing your strategy cannibalizes on profit, the higher you go with volatility, which is a property of every trading system model and so on. Do you measure or just for saying that you wanted to decide to subscribe to the model and long and trade it, do you have any benchmark that we could anticipate of a volume that we could go, or we should figure out empirically by just learn by doing, or is there, do you think, particular those options model and so on, would it be any guideline and the research or even a educated guess of this, or how would you solve it?
Yeah, for options. So the question is, how big can we go, right? Like, how large of a trade can we go? Yeah.
So you make the spread, and the cost of operation, then you need to have certain take profit not to be cannibalized by the size of it. So is there any way that you'd be able to benchmark? Because also the colleague you mentioned the problem when if somebody can show real account. And I could tell you that those real account for the model would be very different from different brokers. Because brokers they
Yep.
do the things.
Yep.
So particularly you might be very profitable with one broker and the other will not be profitable.
Yep.
And if you're profitable for a long time, politically they find a way to take the profits. As part of the business. So the question is there any educated guess or benchmark that could be calculated on how much we could go, or particular in general, or per position, or something like this?
Yeah. So the question is, how big can we go, and then some details around that.
Or we're old enough people to use the model, so it's being saturated, right?
Right.
We kind of, to a certain respect, at certain level, that's better. I mean, maybe some markets are even huge, but so more subscription you go, and it
is not noticeable until usually big numbers. But
Yeah.
at some moment, some big player might come to the point. So would we be able to know it there in a certain way, or is there a way to calculate how big you can go?
Yeah, that's a very good question. So first of all, I'd love to reach that point. Like I said, I'd love to get that big that we have that problem. But for different markets, there are some ways they can look at that. Like for example, options have open interest. Like I would look at open interest and volume to kind of give me an idea of how big this thing can go, right? If the open interest is 10 shares or 10 contracts, you probably, if you're trading at 1,000, you're going to have some problems, right? So looking at open interest, I think is very important. I think looking at volume is very important. If we're talking about stocks, especially high volume stocks, if you're trading Apple, I mean, Jesus, you need a lot of money before you're going to start moving that market, right? And that's because it's a very high volume stock. There's literally millions upon, if not billions of shares traded every day in Apple, right? So I'd be looking at open interest. I'd be looking at volume as guides for that. And I know you work in Forex, and Forex just has insane amounts of volume, right? It's the biggest market in the world, right? So you, if anything, have the least amount of problem in that. I think the smaller you go, if you're looking at like a small cap stock, I'm not looking at its market cap, right? The market cap, sure, that could matter, right? If it's a $10 million stock, but it could be a $10 million stock that has $10 million in volume. That's possible. I haven't seen it yet, but it's possible, right? That I would trust more than a $10 million stock with 10 grand in volume, right? So volume and open interest, that's the two things I'd be looking at to try to figure that out. Yeah, no problem.
Follow up on that
Yep.
line of thinking. So as you're planning to scale to institutional investors, this is a problem, very real problem.
Yes.
At a certain level of volume, this will work great.
Yeah.
But what are your thoughts around that?
Yeah, so same thing. I mean, I'd be looking at open interest. I'd be looking at volume. For example, a bunch of these things that we're trading here, they're like condors, whatever. They're trading the SPY, right? The SPY has quite a bit of volume on it. The SPX is a lot more, and you don't have to worry about that risk if you get assigned, right? So no assignment risk, much higher volume, spreads are much smaller. I'd be trading basically bigger markets like that, right? But you're right. I mean, there are certain algorithms that will have a point where there's a saturation, right? I mean, this is what happened with Two Sigmas, what happened with Jim Simons and Renaissance, right? Like, this is why they stopped taking outside investors, right? Like at some point, they're like, I don't care anymore. I don't want other money. I just want to use my own money because I can't scale this thing infinitely, right? So there eventually is going to be that with everything, right? Even with Forex, at some point, if you're like running $20 trillion or something like that, you're like the US government, you're going to move the markets, right? So everything has eventually a point of saturation. The question is, how far till you get there, and then can you deal with it? And if I could speculate, and I haven't had this problem, we're not fortunate enough yet to have that problem. But I can imagine you could do certain, like I know, for example, Warren Buffett, the way that they trade their shares, they can mask it actually, is they will use a bunch of different LLCs to buy it, right? So it doesn't look like it's coming from one entity, right? And then they'll buy at different points and they'll have, limit orders all over the place. So it's really hard to figure out that they're doing something. I can imagine doing something like that would make a lot of sense.
And in the back testing,
Yeah.
so how did the back testing work? Like, let's say started with 1K, and with every trade, the next trade, always put the entire amount or always stuck to the percentage of the holding?
It depends on the algorithm. So, for example, our Condor Martingale algorithm, like the Condor one, trades with a fixed number of contracts, right? So however many, whatever those contracts are worth, and then it scales up. Actually, it's scaled to a $25,000 account. So if your account grows to 100K, it's times 4, and then it'll automatically start scaling that way. But every algorithm is a little different, right? They all have different things.
So this information about the way the back testing is done, that will be available online?
Yes, it's available online. If you want to get details on it, we can have a conversation. Feel free to book a call with one of our people or send a message to me. We can get into the weeds of it. Yeah. Cool. No problem. All right. Anyone else?
Thanks for sharing so much ideas. Could you also talk about your idea generation process? How many people are working on the strategy, new ideas, or how did you guys coming out of the new ideas? And another question is that because most of the alpha signals, given the time, they tend to decay.
Yep.
And how to manage that life cycle and share some of this?
Sure. So I think I'd answer both questions in the same way, right? So question is, how do you come up with ideas, and what happens when your idea eventually gets stale? Because eventually everything, like Warren Buffett's thing, he bought value investing. That was incredibly profitable back in 1930 or whenever they started. These days, it's not as much, right? Things are a lot growth driven. Value investing is, it's been around for a while, that sort of thing. But what I think is very unique about our company and what I love about what we do, and this is a great question, so thank you for asking it. But what I love about what we do is we have constantly new ideas because of the way that we're structured. Because of this class I was talking about, we do a Tuesday night, every single Tuesday night. People come in, I'm hearing ideas nonstop to the point I can't keep up with them, right? Trade this and trade that, and what if you did this and what if you did that, and I'm making 1,000% a year doing this. It's like, oh, okay, let's try this, right? You try to keep up with it. This is why we do this on Tuesdays. I think we're going to start doing it every day at some point soon once we have enough subscribers to pay for the staff to do that. But it's amazing how many people out there have so many unique ideas that just want to have them automated, that want to try them out, try to back test them, try to improve them. That's how we're getting all these ideas. It's just everyone is constantly giving us brand new ideas, and that's where all this is coming from. And you're right, so someone bring up an idea and it'll work really well for 2 years, and then people find out about it and it goes away, right? Or maybe it's just not that time in the market anymore or whatever, right? So some ideas work for 2 or 3 years and not anymore. Some ideas are more timeless, right? But in general, we have this really amazing ability to produce a lot of new ideas because of the way that we're structured, because of our community. And actually, this is why I think we will beat a lot of the hedge funds out there, because hedge funds, what they'll do is they'll hire the smartest people that they can think of, PhD and this and that, whatever. I heard Two Sigma, Renaissance. If you're not a PhD, they don't even talk to you, right? Cool, all right, so you have a lot of smart people, but that's still only 20 people, 30 people, 100 people. I mean, we have thousands of people using our products, right? You look online for our Python library, LumiBot, we literally have thousands of people using that. We're constantly getting new ideas. I have so many ideas, I literally can't put them together. I don't have the time to do it, right? That's what I think is gonna give us a huge competitive advantage, right? And it is already giving us a big competitive advantage, right? I don't need to hire PhDs because they're already shouting at me to build stuff. You know what I mean? So that's, I think that's a very unique thing about what we're doing as a company. So thank you for asking that. Yeah. Cool. All right. I think it's maybe one last question. Yep.
Have you considered forming a DAO?
We have talked about that before. So the question is, have we considered forming a DAO? For those that don't know what that is, it's a decentralized autonomous organization. My friend had stuck that word into my head because he runs a DAO. So I actually have, if you go on our YouTube, I actually interviewed him about what a DAO is. It's kind of cool. Maybe. It's not something I've thought about very much.
Investor DAO.
Yeah.
What you guys are talking about, investor DAO.
Yeah,
Vote on ideas and investment ideas.
I think it's a really interesting structure. I think it's unfortunate the laws around crypto in the United States, because there's a lot of really cool stuff that we could do if it was legal, right? We could literally just launch a hedge fund tomorrow with an ICO, you know. If we were in China, maybe not China, but like if we were in, a bunch of countries around the world, I could literally have a hedge fund up and running in like 10 minutes. You know what I mean? But the laws prevent you from doing a lot of things like that. So I don't know. It's not something I've thought about that much. If you have some ideas, I'd love to talk about it. I'd love to hear what your thoughts are on how we could do this, because it sounds like you know a decent amount about this topic. Yeah. Yeah, it sounds like it. Yeah, I'd love to talk about that. Yeah, because I think crypto is the future personally. I worked at a crypto company before this, Voyager. It's crazy how fast that company grew. I swear to God, like I met the founders of Uber. It's like just wild how fast that company grew. So I'm a big believer in crypto. I think it's unfortunate the laws that are here. Hopefully it changes. Hopefully Gary Gensler isn't around for that much longer. You know, that stays in this room. but I do think that there's a lot of potential there, right? Because you could have all these different structures and all these different ways of doing things. It's not even just the way you structure the company, but it's what you're investing in. I know people that are turning real estate into crypto coins, so you can, instead of investing in this property down the street, you could buy fractions of properties in Texas. You know, it's very interesting what's going on there. But yeah, I'd love to talk about this if you have some ideas, for sure. Yeah, cool. All right, guys. So I think we'll leave it at that. I've been up here for a little while. Certainly. Yep.
Last question.
Sure. One last one.
Just introduced, and because you're based on like fundamentals and qualitative, which means actually certain kind of knowledge discovered from data, right? Using us into something. Would it be possible? Are you planning to do this like for companies which are just being introduced or just get NASDAQ figures and the lot of those? And because if Apple gonna do well, they're just gonna do 5 or 10%, but the small company would go up, they're just gonna do like 10,000%.
Yep.
So that might be very interesting by like stock picking. Are you working with the company?
Yeah. So there's actually one guy in particular that I'm thinking of that's working a lot with like penny stock mining companies. There's some interesting things you could do with that, you know, pairs trading and all that kind of thing. So yeah, I do think that there's a lot of value in small cap, almost anything really, not just stocks. Small cap crypto is interesting too, right? There's this new crypto coin out there, and some of these, I mean, you're talking about a stock that went up 1,000%. I've seen crypto coins that have gone up 100,000%. You know what I mean, right? Like if you could pick those reliably, I think that's very interesting. So yeah, we've talked about it. We haven't done a ton of progress other than this one person that I'm working with that's doing pairs trading. But I do think there's a lot of interesting things that we could do there for sure. Small cap, it's a different way of taking risk, right? It's instead of taking risk in some sort of leverage, you're taking risk with, you know, this is a brand new company and there's a different kind of risk profile there. So yeah, I definitely think it's interesting. We haven't done a ton with it yet, but it's something that is always on the back of my mind for sure. Awesome. Cool. All right. Thank you very much, guys. It's been a pleasure. I hope you guys enjoy. Make sure you buy some drinks at the bar because they're looking for, you know, making sure that we buy a bunch of stuff. But thank you again for coming, and hopefully I'll see you guys in one of our events online. Cheers, guys. Hi.